All right, traders, welcome to week 2 of Tradecraft. Welcome back, everybody. Happy Friday. Glad to be here with you. This is Jim Simmons with Head of Trading and here to talk foundations and strategy, risk, psychology, community, execution, all of it. So first off, how's everybody doing? Let me know if you can hear me. You can see the screen. Everything good to go. Seems like we are doing okay so far. Let me know. All good, all good. Okay, perfect. All is well. Well, exciting. Very glad to be here with you and welcome back. So, before we go through everything, we'll just kind of talk about, what are we going to cover today? What's on the agenda? So, first off, we're going to review again this week in the market. We'll go over what happened this week. We'll do some risk management lessons, trader psychology lesson. And then our core lesson today, we're going to be reviewing market structure, one of the key foundations of understanding how the market moves, why the market moves in such a way, but also to give you a very simple way to understand who's in control of the market. Because if you can understand who's in control, then you can be on the right side of the market. And that is obviously one of the keys to coming up with your trading plan is right time, right place, right direction. So if you're always going in the right direction, then you only got two other things that you need to figure out. So that's what we're covering today. We're going to look at how price organizes into trends, ranges, weakness, reversal, and most importantly, we're going to look at how do we determine when the market is looking like it's going to reverse? When does it look like it's starting to rotate? So that is what we are covering today. We'll look at chart examples, a lot of charts. We like to really get into the charts and review everything. We're going to look at how do we trade with structure versus what we think, because doesn't really matter what we think. The only thing that matters is what price is actually doing, and we might think we know what it's going to do, but of course we don't always know that. Before we dive in, of course, we are going to be looking at charts and trading and all things trading, so we can't guarantee any results. Past performance does not guarantee future results. This is for educational purposes. We're not here to tell you what to trade, where to trade, when to trade, or how to trade. This is entirely up to you. If we are all good on the disclaimer, give me a yes in the chat box. We'll keep moving forward. All right, good to go. So this week in the markets, let's review what happened. So we're going to go back to our little guide here. Let me post this in the chat box for you so you can follow along, and we'll just keep adding to this each week. We've got the tabs here, so you can go through previous weeks if you want to, but obviously we're focused on this week. As for recordings of the past sessions, what we're going to be doing is we're going to build a page on the Tickblaze website, and on that page we'll have a basic rundown of what Tradecraft is, and then ultimately we'll have in there all the replays. So be sure to check that out. Now, since this event is entirely free, there's no agenda, there's no, pushing any product or anything like that. This is solely designed to help other traders learn and to improve their craft, hence the name Tradecraft. Okay, so here's the deal. The deal is, as long as this event continues to grow and it is well attended, we will keep doing the event. So it's very important that you share this with your trader friends or communities so that they can come in and learn for free. It's a win-win. And the more people that come, the more likely we are to keep doing it. So be sure to spread the news, okay? So let's look at our weekly briefing. This week, reinforce the same regime. Drivers were more aggressive, so oil surged as Middle East shipping disruptions expanded. Yeah, there you go. Treasury yields climbed, energy inflation, strong labor data. Tech weakened again. Alphabet and Tesla raised concerns about the cost and the cash burn behind AI, and those were some of the releases that we had last week on earnings, and so that led to additional chaos in the markets. It was a little wild in the markets at least on NQ. RTY ranged a bit. We're going to look at the big picture overview here in just a moment, but it was a pretty interesting week. I don't know how you guys felt about that, but so let's take a look at, dollar strengthened primarily against the Japanese yen. Equity remained corrective. The damage still concentrated heavily in NASDAQ, as we saw. What actually moved the markets? Middle East escalation. And you can read all the details, but crude above 102. That is a huge spike, but I don't know. Let's go to crude for a second here and just look because I feel like that is not accurate. Oh, that's Brent. I'm like, what are they talking about? It didn't go to 102. Am I missing something? Okay. So we went the high really for crude this past week was like 93.50. So it is escalated and elevated as well in price. So a huge run up this week. Not good for, pricing on anything because oil drives pricing on everything. Higher inflation, right? Higher treasury yields, all that stuff. Oil is very, very, there's a lot of dominoes that fall with oil. So there we go. Alphabet, Tesla changed the AI conversation. That's important. Alphabet fell 7%, Tesla 14%. That's a pretty big move. No longer rewarding companies for announcing AI investments. There's going to be, traders, investors that are looking at it going, AI investing, retro. Is it burning cash? That's the next question that comes after that statement now. So good to know. Labor market extremely strong, still going well since last week. Immediate market implications: treasury selling, higher yield, stronger dollar. Increased Fed hike expectations. We talked about that last week. There could be a hike coming, and they're going back to that. Tariffs, another inflation risk. Possibility for new tariffs coming. Fed Reserve interest rate expectations remains 3.5, 3.75. Rising oil prices, low jobless claims. Yeah, that could all contribute to the Fed's going, we could look at raising, but obviously you have the cost of crude, which raises pricing across the board. The more expensive it is to deliver goods, the more cost it's going to have, of course. NASDAQ, volatile, very volatile. I don't know if you guys saw it. If you trade on smaller time frames or bar sizes, you probably saw NASDAQ whip around a little bit, get a little bit choppy there. Rallied Tuesday, but failed to sustain the recovery. And yeah, we'll take a look at it. It did push back, but we'll look at the chart, and it's pretty clear to see what happened this week after Tuesday, and ultimately where it got hung up, and then took another dive bomb, and really we're right back where we started last week. So there's that. So anyway. Key levels are in here. If you want to mark those, feel free to do so on your charts. You'll have access to this anytime you need it. ES, we'll look at ES on the charts to see what's going on there. Russell was still kind of going sideways this past week. So it's really just kind of bouncing around. Relative strength is fading. Maybe it'll drop. Who knows? We'll look at the charts. Dow no longer defensive. Crude, you've got some crude levels here as well. The bias, bullish above 86, 87. Okay. Gold, traded around 40, 50. Heavy pressure Thursday, modestly high. Why gold struggled despite war risk? Geopolitical uncertainty, equity market weakness. Yeah, there's a lot of unknowns. Higher treasury yields, rising rates, stronger dollar. That is a big one. Obviously, the dollar and gold are very correlated. Gold neutral to bearish below 4,100. Treasuries, if you trade the treasuries, intraday high. What drove the sell-off? Crude. jobless claims, increased Fed hikes. All make sense. They're all connected. US dollar and currency. Dollar is stronger. That's what we just talked about. Meaningful drivers. We already kind of looked at that in our initial intro. Outlook for next week. Bullish scenario on crude, 10-year below 460. ES reclaims. NQ reclaims. RTY holds and recovers. That's the bullish scenario. Bearish, if it returns above 92 and pushes up from there, they're expecting a sell-off. That's interesting. ES loses and so on. You can mark these as precursors to the market this week. But overall breakdown, equities attempting to stabilize, fell back down, oil back up. So not so great outlook from the past week, right? If we're looking at just does it benefit us? So there you go. So that is where we're at. Let's go to the charts and look at it from an analytics perspective. So here's where we were last week at this time. So this is NQ. We had the sharp drop on the 4-hour, and we could see the market tried to regain some territory, tried to regain. Where does it stop? Right here. Is there any surprise to that? No, there is not. There should be no surprises there. Swept that level, couldn't break, came back up, lower high retest, and took out the lows. At that point, once this low gets taken out, and this is a lot of what we're going to look at, we can see sharp drop all the way down. Those of you that traded that on Thursday, traded the shorts, you probably did pretty well there. So that is the outlook on NQ. We can anchor this high with our anchored VWAP, and this will give us some resistance levels that we could potentially trade on the way down. Right now, we're stuck at the lows. So what is it going to do here? Is it going to break and keep going, or is it going to stop? So let's move this over to Monday. There we go. So that is our past week. Tried to rally, couldn't, and then bailed back down. I'm gonna maybe move this back over Sunday. Yeah, there we go. We'll move it there. So there's our full week on NQ. Let's go to ES. ES, what happened on ES? ES did drop below the floor. So ES had, here was last week going into Friday, Sunday. So here's our week on ES. So bottomed out, sweep, came down, swept again. Where does it stop? The first stop was this wick right here. And then did it come up to this wick? No. So that would have been the next, major resistance area would have been there. But it didn't really make it. It made it to this wick right here. So that's it. So there could be, once assuming ES recovers at some point, that could be a meaningful level to look at. But topped out, huge break. So if we look at it this way, here's our break of structure. Then we can move our anchored VWAP over to here. And that's really what we're looking at. And on a bigger chart, if I can grab this, give me my anchored VWAP. There we go. Let's move that over. On the bigger charts, I like to move it over a bar to the left. So came into anchored VWAP here early this morning and dropping down. So what is the next possible resistance level? Well, you have a pretty significant fair value gap in here. So if we cover this, this was the fair value gap that was created on that sharp move down. Again, that was on Thursday. So looking at this, it came in, tagged again, and then swept into it. But it didn't fill in the fair value gap. It only kind of came to here. So that is still in play to get refilled. You're looking at a possibility that they're going to come up and test this right here. That's the major level there. And ultimately, you'd be looking at something like that at least, and then possibly that as a resistance zone. But ultimately, I would kind of looking at it, at least like that would be something that you'd be looking at. So there's possible resistance there. Um, yeah, there you go on ES. Let's go to gold. Gold. What happened on gold? So we had this level marked out, got a rejection out of that level, came back into the anchored VWAP and rallied. So this was the rally up until about Wednesday, came all the way back up. We had a break of structure here, and then didn't quite get a pullback in here as far as I can tell. Yeah, no. I'll just do that. Not quite a pullback. So this is all part of that same impulse up and then correction down. Um, yeah, so ran through the highs, came right back inside. So where are we going to find support here? We know that we are bullish on the outlook overall. It hasn't really been confirmed as a bullish trend, but we know that ultimately it's more bullish than bearish. So if we look at possible support zones in this area, we have this right here was a support zone, clearly reacted. That's done and over with. Where's the next one? It's going to be down here. Move this over like so. And if we look at where's the order block on this one, it's actually right here. So this is all support right here. If they get through that, the only thing you've got left here at the lows is this. That's what's left at the lows. So, when we look at ES and Q, RTY, a lot of those markets are designed to be trending markets. You want them to go up and to the right. Gold, crude, designed to be sideways markets. So why do we plot support and resistance on these? Well, that's why. So if we look at where is the order block at the highs at this point, it is here. Started there and then would have gotten chewed up to here. So this is your resistance. There's your support. We can get rid of this one at this point because it's no longer valid. And we were still bullish in this environment, but now we're down. If we look at just one of the things we're going to look at today is structure and drawing in your structure lines, which actually no, that would not have been a based on the way that I draw these, this would be all one impulse. So we're inside the impulse. Who can tell me what that means? We're trading inside an impulse. What does that mean? Consolidation. That is correct. That is absolutely correct. Let me see if I can open up the chat box. Let me try this. There you go. Now you can chat with everybody if you want to. So Chris had a question about 3-bar pattern, a compass, boot camp replay. There was a boot camp last week. I don't think it was on that. However, yes, if you want to see the free boot camp from last week, it should be available. Just reach out to support. Whatever you need, bottom line, just reach out to support and they'll get it for you. You got it. So yeah, so at this point, consolidation on gold, you should be looking for, trading support and resistance versus trading the trends because we are trading inside the impulse. Impulse being the move in the market that caused a break of structure. Anything, when we talk about structure, it looks like this, right? Well, this is an impulse. Why? Because it broke structure. So impulse correction, impulse correction, impulse correction, impulse. Okay, so that is your wave theory. So that's what we're looking at on gold. So probably looking at some sideways action for a while here until it can break through one of those levels. Crude, there's your huge run up. We had a lot of sideways action. What did we talk about last week? Who was here last week? What do you guys remember what we covered last week? Anybody? You guys remember? So looking at this area, this is a balance area. All right, we looked at balance versus imbalance, if you remember. Yeah, exactly. We had the up, down, down, up, down, up. On the smaller time frames, it's easier to see those. On something like this, where it's, yeah, there's the series of up bars. There's a couple down bars, up bar, bunch of down bars. So it's not quite a down, up. But if we go into a higher time frame, then we will see that. Odds are. So this is a balance zone. What happened? It left the balance zone, came back, retested. We talked about anchoring a line here and just saying when it breaks through that, this will become support. So now we can get rid of this balance zone and we would draw where's our order block here, and it's from here to here. And then that would ultimately be what's left of the order block here. So this is support on the way up. We can also move this over to our, let me just delete this one and draw a new one. We'd move this over to here, and this would become our anchored VWAP on the way up. You can also even draw one here because this is a pullback that led to a break of structure. There's your pullback, there's your break, there's your impulse. We are inside the impulse past anchored VWAP. So at this point, we'd be looking at some sideways action in here for a little bit. Between here and here is what we're looking at. So I'm going to go ahead and get rid of this line at this point. We're going to draw our break of structure right there. And there's actually a break of structure as well right here. So there's our other break of structure. And we're going to go through all this today. We're going to look at, breaks of structure, all that stuff. There's our order block on the way up, came out, tagged it down to here. So that is what is left of the order block. So there's our support levels. This one at this point, we can leave it there because it is still relevant. But what I will do is I will just go ahead and extend these lines. Oops, not left. Because these are now active zones. So these are going to be support zones. So if you're looking at things, levels to trade, if you're a crude trader, it looks like we are at 87.35 and 84. Okay, so those are going to be our key levels that we are looking at there. And looks good. All right, let's go to RTY. Still sideways. Those are our support resistance lines. We swept. So what are we seeing here? Who can tell me who's in control of the market right now? Anybody know who is in control? Okay, we've got some buyers, bears, buyers, a little bit of both. So here is the control. So when we look at, always start with your impulse. That is your impulse. Until we close outside of that impulse on this chart, no one is in control. So that was a trick question. Sorry. I love trick questions. Technically, based on this chart, no one's in control. We ran the lows, though. So what does that mean? That's our first sign to pay attention. Something is happening here. What happened is it pulled back, couldn't go any higher, and now it's running for those lows again. So one of two things is going to happen. Right now, we are in transition. We're not really in a position where we know buyers or sellers are in control yet. We talked a lot last week about restraint versus reaction. You can guess which one pays more as a trader. Certainly, restraint is always going to pay more. So if we look at the context of this market, low, high, low, high, new low. So in here, did we break structure? No, because we didn't close below it. Let me move these back in. Now they're not going to line up. But there's our chop. Chop, chop, chop. Break. Did it break below the chop? Yes. Sign number one, swept the lows. Sign number two, pulled back. There's our three. What is going to happen at this low will drive everything. If it comes down and either A, sweeps and then breaks, then we're probably headed back up. If it comes down and puts in a higher low retest and breaks, we'd be waiting for the first pullback to go long. Okay, so that's the context here. It's a wait and see type of environment. There's no like, I'm really good at knowing that this is gonna, move one way or the other. Now, that said, would we trade this as support level at this point? What do you guys think? Would we trade this as support? Yay or nay? Good. Yeah, no, we would not. And the reason is that this level had been swept already. So this level's out. Is there potential for support here? Yeah, but it's possibility, not probability in this case. And so we're always looking for probability. That level has failed once. At this point, we are looking at resistance more than anything. It's not to say that the bears are in control, but we would be looking to potentially trade something in here. The only thing about this, though, is you have 1, 2, 3, 4. It's a lot of tags on these levels, right? We saw that it swept this. So is that going to happen down here? It's a wait and see type of environment. So that is our market breakdown for the week. There you go. We'll just go back to NQ, and we're all set there. So good market breakdown. Let's talk about structure and risk. So structure defines risk. What does that mean? Bear with me one second. I just want to grab something here. There we go. Cool. I've got what I need. So identifying structural invalidation points. Avoid stops inside normal pullback areas. So if we go back to our chart for a second, where did it go now? Did I close it? I thought I just moved it, but I think I closed it. So let me open this back up. So let's go back to WebTrader. So what does a structural stop look like? Well, if you were getting, let's say you were going long off of this break and bullish, and you thought, well, this is clearly going to be an inside move. I'm going to look to get long right here. Okay, so let's say this is your long entry. Well, where's your stop going to go? If you are trading this level, get out of here. Okay, there we go. If you're trading here, where should your stop go? Below the low. Now, this is not a great trade because it's a huge stop, but we're just going to have our point here. So that would have been the stop, right? So if you were trading that, let's say that's your trade, there's your long position at that, at the close of this level or something, and your stop's going right here. Now, it doesn't give you much room to hit target. You would have had a 0.75, not a great trade, but anyway, that's beside the point. Just a way to show, why would your stop go down here? Why would we put a stop down there and not up here or something somewhere else? Anybody have an idea? Because pullbacks, right? Because the market could come down and retest something in there. So we're always looking at structural levels. If we're going short in here, let's say on a break, then where would our stop go? Our stop would go up here, or even better, up here. And we give ourselves a little bit of breathing room, because if the market's going to pull back, it could come back up to test these areas and then go. The last thing you want as a trader is to get stopped out and then watch the market go hit your target without you. Does it happen? Yeah, of course it happens to all traders. And but putting your stop below those levels, you have to ask the question whenever you're placing your stop, at what point was this trade not going to work? That's the question. I don't like to say where you're wrong. At what point are you wrong about the trade? Because you're never wrong when you're following your trade plan. You're never wrong when you're executing as you're supposed to. You're always right when you do that. So if you're executing, you're not wrong. So I like to say, at what point does the trade not work? At what point is the trade proven to be a loser, right? You go from think of it this way. Like we talk about probability over possibility. So what does that mean? Well, probability says, 80% of the time when I trade out of a pullback, it works, right? That's probability. But if the trade comes all the way down and tags the low, that probability drops. And when it starts to become a coin flip trade, there's no longer probability. So, should you hang on to that trade? Probably not, because you don't know what's going to happen. So, at what point do you look at the trade and go, in these environments, when the trade goes against me X, Y, and Z, and what percentage of those trades are going to work at that point? And that's taking that layer off and going one layer deeper when you're looking over your trades. Okay. So in a long, you would put your stop below the low. So if you're trading on a pullback, say you get in here off of some kind of signal, stop goes below the low, entry is here, then you're looking at previous levels. You might take a quick target at the high and then leave a runner and trail, or you might take another target up here, targeting previous structure levels, whatever the case might be. Okay. But stop below the low. Structure stops are always going to do better for you. Have a reason to put your stop where it is. And we talked about that last week. If we are getting in here and that's our trade, stop below the low, we measure our entry to the stop. This tells us, how many ticks are we trading? Based on that, how many contracts do we trade to get to our preferred risk? That's what we looked at last week when we were identifying risk. So knowing where to put your stop, that needs to go into your trade plan, obviously. Now, when should you move a stop? When you are profitable on the trade, not when you are negative on the trade. Yes, exactly. Never, essentially. Never move your stop. Once you've defined where your stop needs to go, leave it. The only exception to that is if you get close to target, move your stop to break even. So you don't have to take a loss on a trade that would have worked or that you should have gotten some kind of profit out of, right? So, yeah, you could do, it depends on what you're trading, what strategy. Um, you could use a factor of ATR or something like that if you're doing trend trading. Um, it depends on what you're doing, right? But I'm always a fan of structure-based stops are always going to be performing best. So most of the time, I guess I should say most of the time. Avoid stops in the middle of a pullback zone, though. You do not want to be stuck right in the middle. You do not want to be putting your stop right above key support levels because what's going to happen? They're going to come down, tag support, and go without you. And if you got stopped out, you took a loss for nothing. If you had just moved your stop a little bit lower and sized down so that your risk is appropriate, it would have been fine. All right. So understand that sometimes you're going to take heat on trades and you got to give yourself room for that. So, oops. So don't put your stops in the middle of a pullback zone. Stops should be placed based on ticks times contract equals your dollar amount risk. And you should be looking to, generally have roughly the same risk on your trades, unless you grade your trades as an A setup, B setup, or C. Then in this case, you might do one contract, three contracts, five contracts, something like that. Obviously, depending on what you're trading, micros versus minis, whatever. So identify the structure, find the invalidation point. At what point is your trade a failure? It's not you as a failure, it's the trade. At what point does the trade no longer make sense? That's where your stop goes. So find that point, and that could be, if it moves against you to ATR, like Frank said. If it moves against you that much, maybe it's just not going to work. But with that, I would still look at, though, if you're trading based on a factor of ATR, I still would look and say, all right, if this is your structure level and your stop is going here, hey, you probably want to move it down a little bit and size down your trade so you have more breathing room. Um, That said, though, too, you don't want to make your stop so far away that you have no room to make any profit anymore. So there's a bit of a balance there for sure. If your structure requires way too much risk, what do you do? Wait for the next trade. Wait for the next trade because if you're going to be way outsized, if your entry's here and you got a major resistance level here, but your stop needs to go way down here, that's not going to work out so well because you got no room to make any profit on that trade. So just wait for the next one. Wait for something better. Cool. So let structure define the trade. Don't tighten your stop just so that you can trade bigger size because what's going to happen is your stop's going to get hit and then you're going to watch the market move without you and you're going to be miserable. So, um, let's talk about psychology. What's our psychology lesson for the week? Stop flipping your bias. One little swing break does not immediately flip the bias. We looked at that on RTY. With RTY, we're like, well, is it, who's in control? Nobody. But what well, they flipped this swing and then they went down and then it's flipped here and then it came up. We have all these things going on in here. And if I draw this in, there's a pivot, came up, and that's an outside bar, but ultimately would go to here and then to here and then here and then here and then here, 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 here. So we clearly broke 1, 2 levels on the way down. So we should be looking for bearish, right? Well, we're looking for closes. We're looking for a couple things. We're looking for a close below the low. And we're looking for follow through. Follow through is the most important factor that tells you which way the market's going. Did we have follow through here? No, we did not. Therefore, we don't know who's in control. Now it's all bets are off. It's below that level. So it's time to pay attention to what's going on in there. But not most, some traders are going to look at this and go, okay, we're long. Okay, we're short now. Okay, we're long now. Okay, no, we're not anything. We're looking at, is there meaningful liquidity here that I can trade? Is there meaningful liquidity here that I can trade? If not, then I don't trade. And I wait for my conditions to line up, or I trade a different market where my conditions are already there. So don't just let your bias flip back and forth. If I go to kind of a smaller time frame type of view, this is a better example where we see something like this. And we can see it right here. We have a pullback, comes down, chop, chop, break. What just happened here? Well, we had a trend line break, right? So the question is, did we get any break of structure? We did on a simple structure point of view. But the next question is, are we inside the impulse, which is from here to here? This is our impulse. As long as we are inside of that, we are still bearish. This little trend line break, this little structure break, that does not indicate to us that all of a sudden the market is now bullish. That's not enough. We need to see a break of an impulse at least to tell us the market is going the other way. Where's our last impulse? Technically, I guess, looking at this, this would have technically been a break of structure. Oops, I'm using my hotkeys. Sorry about that, guys. Using my hotkeys. Technically, this would have been a break of structure, and then this was not until here. So we had a momentary break, but it's still very sideways. See? Very sideways, momentary break. We're catching resistance up here. Market comes right back down and resumes its bearish move. So we're going to look at this a lot today, so don't worry. The point of this is one swing does not immediately flip your bias. How many of you have ever gotten caught going, okay, I'm going, whoops, interesting. I'm going long, and you see this, right? Let's draw this out. Market's going up, down. That would be up, down, up. and you see that and you're going, okay, I'm going short. That's it. I'm short now. You were trading long here, right in the middle. You couldn't hit your profit target here. So you got out at break even like a good trader should. And you saw this and you went, okay, now I'm short. I'm trading this breakout. This thing's going to rally all the way back down. Anybody ever done that before? No, nobody. You guys are like, I don't want to admit it. I don't want to admit it. What just happened? Don't diddle in the middle. You got stuck in the middle of a market. And you're going, all right, now I'm short. Crap, 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 crap. And your stop's up here, and you're like, okay, I'm okay, I'm okay. And then you see it come down, you're like, ooh, I'm going to add to my position here. It's really going to run. And then you finally get out and you take on little tiny little bit of profit. And you're like, all right, I'm good. I got my profit on that trade. That was a terrible trade. You know it. Don't do that to yourself. Don't just look at it and go, okay, we're not, now we're going down. No, we're not. We were never bearish in this entire environment here. Why? Because we stayed bullish the entire time. We never closed below the impulse. That is our impulse low. So we're still bullish. Now, at what point do we look and say, this thing might be taking a turn? Here's what we're looking for. 1, 2, 3, inside the impulse, trendline break, came all the way back up. We could not get through the high. Got stuck. Now what I'm looking at is when we break through this, that's my sign. Market's headed down. I've already got my lower high retest. Very important. Anytime you see that, very important to pay attention to, because a lot of times what happens comes in 1, 2, 3. Oops. 1, 2, 3 down. It'll top out, it'll bottom out here for another time support, come into here, and then slam down. And at this point, that's when you know you're looking for trending. But we always have to look to the left. Where's our support? Right here. So you always want to make sure you got room to take profit if you're going to be trading something in here. This is exactly what we're going to be looking at today. Okay. So why would we just flip our bias back and forth and back and forth? Because we fear missing. We fear missing out. But usually what happens for those traders is they get long here, didn't take profit, get out, break even. Then they flip to short here and their stop was here, so they got stopped out. Then they come up a little further and they're going, okay, I'm waiting for the pullback here. They go long, they still don't take profit. Their stop was here, they got stopped out. They're coming down here. Okay, now we're going short here. They get into support. The stop is, they're going short, and the stop is, somewhere back up here, comes back up, stops them out, and then goes without them. So this is a lot of times, novice traders, this is where they get stuck because they have one factor in their trade plan that is telling them when they see a break like this, then trade the short. But it's not enough. Not enough. You're flipping back and forth too much. You're too easily swayed. And it's better to miss the trade than to take the trade that you wish you weren't in, right? Better to wish you were in a trade than not in a trade. And restraint versus reaction is always going to pay better, both from your mental health aspect and to your account. And you cannot underestimate the power of mental health in trading. Okay. Hesitate and lose. Yeah, that's right. Hesitate and lose, or hesitate and get paid every once in a while and then lose, right? So you don't need to be early. You need to be in the right place at the right time. Most traders are early. Most retail traders are early. But then you have other traders that are saying, well, I don't want to wait until I get this whole thing. And oh my gosh, and it's got this whole rotation. Now it's down. And now I'm trading into support. Well, guess what? You were still early. What? I waited for the break of structure. I did all those things. I waited for the bias. I waited for this. Yeah, but you had no room to take profit. So what do you need? You need a pullback into a better location. Location is just as much to do with stop placement and target placement. You need to be able to take profit. We just talked about that. If your stop is way up here and you're getting short here, where are you taking profit? Because support is right there and your next support is right there. You got no room. It might work, but we don't trade on might. We trade with might, power might, not it might work, not that. Okay. Yeah, we're not YOLO traders, okay? We're not, yeah, no. But what happens when you're wrong? You get into a trade, you watch the stop, it goes without you hit your target. You get frustrated. So then you take the next trade and your stop's way too far and you get stopped out anyway. And you get frustrated even more. And it all starts to roll down the hill, right? Um, so another thing when we look at if you're trading on reversals, weakness is not a reversal signal. So weakness looks like this. That's weakness. It's really balance is what it is. Here's our balance zone. If you were to look at this on a higher time frame, in fact, you can see there down, up, right? And then it pushes and then it swept. But the balance zone is really all of this. It started here, right? There's your noise that started this balance zone here. And it kind of stayed inside. Yeah, it broke out here, right? We can look at it and say, okay, there's our break where we had the open, high, low, close below. This is last week's lesson. We can draw the order block, and there's your order block push. So anyway, but weakness is not reversal. Notice what happened here. Bounce, 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 break. We thought we were getting a reversal. No, you didn't get a reversal. You got a momentary stall where there was balance in the market and the sellers eventually took back over. In this environment, you have no idea who's going to win. Not a clue. And if you say you do, then you're smoking something really good. Or you have a crystal ball or you got something figured out. But no, nobody knows what's going to happen in those environments. Not until after it happens, right? Reversals require sequence. It's not just a one, two, three. We talked about this last week too. There's no such thing as a 1, 2, 3 in trading. It's usually 1, 2, 3, 4, 5, 6, 7. Okay, now I know. It's like you can't just look at this and go, okay, there's our reversal. Boom, in it to win it. I've got my reversal. Yeah, you might get a nice pullback here, trade back into the highs. That's fine as long as you know what you're doing. But it's not a full-fledged reversal. It hits the high. At what point would it be a reversal? It would be a reversal when we do this, pull back, break, and close. That's our sign that now we're headed up, and it's confirmed. It's a lot more involved with just, oh, it bounced off of my support, so it must be a reversal. No. If structure holds, continuation is possible. If structure breaks, fails to recover, transition is possible. If opposite sides creates new progress, then the reversal becomes more valid. And we're going to look at this again a lot in today's lesson. So what does structure show? Let's start with that. We've already been kind of diving into it as we go into this lesson, but structure's higher highs and higher lows show bullish trend. This one we don't know, but this was a higher high, higher low. Downtrends, you guessed it, lower lows, lower high. That would be a bearish trend. Overlapping swings, range, up, down, up, down. Can you do it in waves versus candles? Yeah, you can. We looked at last week, up, down, right? That was our balance zone. Can you do that with waves? Yeah. There's your wave. So you can do it both ways. But that is your overlapping. Failed follow through or weakened follow through for that matter shows weakness. So failed follow through looks like this. There's your failed follow through. This pivot could not break this high. This pivot broke this high, but still couldn't break that high. What are we expecting at this point? Usually a sweep, come back to grab all that liquidity, slam down. That's what we're looking for. That is your reversal sequence. Usually it comes in the form of like this, where the highs get less and less higher and the pullbacks get deeper, and then eventually it starts turning like that. And some of you thought I was drawing Bart Simpson, and I probably was. So there's your difference between this high and that high. Then you measure what's the difference between that high. What's the difference between that high? Oh boy, we got really, really, yeah, kind of looks like him, doesn't it? What happened is this one didn't have as much follow through as the previous pivot, had less follow through. Then we saw, okay, came into support, pushed, lower high retest. That's your second sign. Sign number one, no follow through. Sign number two, lower high retest or liquidity sweep. Usually one of those is going to happen. Technically, we can look at that and say that was a liquidity sweep. And we had a lower high, bounce, another lower high. So that's two for the money. Then we get a break of structure. Now we're looking for what's our pullback? Go. Now we are bearish. And it requires all of these things to take place. Limited follow through. What happens if you have just this and it just slams down? Are we bearish? Technically, yeah, but we're not confirmed yet. I'm like, man, what on? I'm going to be waiting on the sidelines all day. I just need to trade. I'm a trader. Trader's going to trade. Yeah, trader's going to trade. That's what they do. Not always right, though. When you see this and you get a huge break, what usually happens next? Sellers try to get in here on a pullback, get squashed, comes all the way back up, tests the high, does a liquidity sweep for good measure to take out all the stops, and then goes without you. Didn't we just say that that was the sequence we needed? Lower high retest, liquidity sweep, break. We already broke the impulse. Didn't have to go in that order, but then we broke the next impulse again, and now we're looking at going. So it's a lot more involved. We're going to look at it more on the charts so that we can make sense of it. But let's see. Yeah, broken structure shows potential transition because how many times have you seen it go like this and then go like that? And you're like, dang it. Or like this, A, B, C, sweep the low and go. Everybody thought, oh, we're going short now. Broken impulse. I'm looking at going short. Not always that simple. Not always. Sometimes it's a starting point. And we just broke back above the high. So broken structure shows the potential transition. Confirmation is what separates the reversal from the noise. So structure is the pivots of the market. That is the higher highs, higher lows, lower low, lower high, so on. Strong pivots versus weak pivots. Strong pivots, any pivot should create directional progress. What that means is this pivot should cause the market to go up. This pivot needs to cause the market to go down. If this pivot fails to break this, this is a weak pivot. And this pivot goes on to break this level. This is a strong pivot. So some of you might hear me call them structure breaking pivots. It's my own terminology that I use. That pivot went on to break structure. That is a strong pivot. It's likely to be defended. Likely, not always, likely. So in this environment where we've got a break of structure here, strong pivot, and the market retraces all the way back down, what happens? Who can tell me what happens at this point right here? Anybody have any ideas? Any thoughts? What happens there? Bounce. Why? Yeah, why is there a bounce there? How often do traders like being wrong? Traders don't like being wrong. So what happens? They defend their position because they know their stop is right here. They got in here, they went long, didn't take profit because maybe they didn't get enough follow through, and they couldn't take profit because their stop was way too far away, and we just looked at that. So their stop is here. That's where their stop is. So what do? They add a contract because the market went against them. And now they're hoping, holy smokes, I'm going to add some money on the table here so I can get a better entry position. And because I'm going to be right, that's it's going to feel way better when I know that I got in here and took profit there now, instead of just accepting the fact that the first trade was probably not going to work. Um, but that's part of it. And then you have all the other traders that are providing liquidity because they're the smart traders that waited for the pullback. Maybe a good position, may not be, but there's liquidity there, which is buyers defending that price. And so that would be a strong pivot. Now, if you have this and that environment, we know that this one was strong, so that one held up support. This one was weak. So we're not looking at trading that as resistance because this is a weak level that failed to break structure. This level broke structure, so this would be where our resistance is at that point. Okay, so strong pivots versus weak pivots. That's the easiest thing that you can do as a trader to identify your structure. Find the strong, find the weak. That'll help you understand when you're on the right side of the market. Whenever you break a strong pivot, aka a structure breaking pivot, this is a very important sign. It is one sign. It is not all your signs. It is one sign. Um, so weak pivots usually form inside of chop. They don't create progress. They have little reaction. They usually get reclaimed pretty quickly. Reclaimed meaning they get run over. Whereas the strong pivots are going to provide continuation, right? They're defending that price. Internal structure is going to be anything that happens inside of the impulse. How many of you guys have ever seen that? It's all inside of this impulse. Remember, impulse, correction, impulse, correction, impulse. This is all inside. This is inside waves. What is this? This is noise. Can you trade it? I like to call these landmines. It's also a giant balance area. Market failed to make meaningful progress in a new direction. Therefore, there is no direction. Okay. External structure is going to be breaking structure, right? That is moving outside of the impulse. Anything that happens inside the impulse is weak. Anything that happens outside the impulse shows strength. Make sense? Context determines the importance of it. Trend continuations. Impulse creates new directional progress. Pullbacks hold above or below key structure, usually. If it doesn't hold, then what is it? If a pullback doesn't hold above that price, what is it? It was a pullback here. As soon as we broke below that, it's now an impulse because it broke structure. Okay, so it changed. I didn't know it could do that. Yeah, well, it could be anything you want to be. Now it changed. It changed into an impulse. Healthy bullish structure, higher highs, higher lows, buyers defend, new impulses. Healthy bearish, just the opposite, continuation, clear directional progress, follow through. Follow through is just about everything. What about continual expansion, where it just kind of keeps going and going and going? At what point Do we show weakness? Well, we're still creating new highs. Yeah, but what's our pullbacks doing? Deep pullbacks, deep pullback, deep pullback, deep pullback, shallow follow through, shallow follow through. That is your sign that a reversal is potentially coming. How do you see it? Low follow through, deep pullbacks. Those are two signs. Lower high retest, liquidity sweeps, break of structure. And by break of structure, I mean breaking the impulse, breaking the structure, breaking pivot. Those are your signs that the market is reversing. And you need all of them. Well, you don't need all of them. You need most of them. Okay. There's no such thing as always in trading, right? But don't always mistake a normal pullback for a reversal. It could be reversing against you. And knowing what these things look like is going to keep you on the right side of the market, right? Structural deterioration, what does it look like? Again, smaller impulses, deeper pullbacks, failed new highs, smaller follow through. When the market breaks through the previous impulse and comes back and then breaks, you're now in a full downtrend. So again, what does it look like? Low follow through, deep pullback, little follow through, sweep of liquidity, or lower high retest, break the impulse, come back, pull back, confirmed. All of these steps lead to confirmed. If you don't have all of them, you don't have a confirmed new trend. You have potential, potential bearish. And a lot of traders are like, this guy don't know what he's talking about. There's no way you have to wait that long. I've gotten so many good trades by just getting into the market. Yeah, and how did that work out in the long run? Let me be the word of caution to you. And you're going to hear my voice in your head when you take a reversal too early. And you're going to go, damn it, I hear him. I hear him in my head right now going, you should have waited. You should have waited for the this thing and the that thing and the lower follow through and the deeper pullback and the liquidity sweep or lower high retest followed by the break of structure, which is the break of the impulse or the structure breaking pivot, then the pullback, then the break of structure. Okay, now we're bearish. Now, if you're a reversal trader, you might not need these, but you need the other ones. Otherwise, you're trading noise. How many of you are familiar with divergence, momentum divergence? You guys familiar with that? How many of you have learned momentum and divergence? Yeah. What does divergence look like? That is divergence. That's exactly what divergence is. Do you need a momentum indicator, an oscillator to tell? It's easier to see, but it's technically not necessary. Your RSIs, your MACDs, CCIs, MFI. How many acronyms? It sounds like we work for the government, for crying out loud. I get so many acronyms in trading. Any of those could work to help you identify quickly, though, that there's limited follow through because you're going to see that in the form of divergence. It's a quick way to determine it. Okay. Again, bullish deterioration. Highs get smaller, pullbacks go deeper, buyers fail to regain control. It breaks out to the downside, and then off it goes. Now, what is the best timing to get into a trade in this sequence? We know we've got 1, 2, 3, and we've got the slow follow through, lower high retest, break the impulse, pull back, and go. That's our sequence. But what's the best time and location to get in to this sequence? That's the best time. But you don't know when this is going to happen because it's not a confirmed sequence yet. So you can't. It's not to say you can't get in, but you're going to be lucky sometimes and fail most of the time if you do that. You wait for the right sequence, you're going to get at the right timing. What is the best timing in trading? Anybody have an idea? Some of you that might be more advanced might know this. What moves the market? We talked about this last week. What moves the market? Anybody? Liquidity. That's right. In what form does liquidity move the market? Sweeps? Could be. Why? But why sweeps? What type of liquidity is moving the market? See if you guys remember. What kind of orders? We're on the right, definitely on the right track. You guys are right there. Institutional? No. No. Market? Yes. Market orders. Aggressive market orders. Aggressive market orders look like the guy who went long, who put his stop loss below, guy or gal, okay, put their stop loss below the low, and those stops just got run. That's what fuels the market movement. Now, granted, the buyers are going, oh crap, I just got stopped out. I'm getting right back in because I know this trade's going to work. I know none of you have ever done that. And I'm identifying with everybody here right now. You got stopped out, you got right back in on another buy because you got a better entry. And oh, it's totally going to work. This is my key bread and butter setup. It's going to work. And then what happens? The smart sellers, i.e., you, are waiting for a proper entry timing. And then when the stops get run this time, what do you think is going to happen? Ooh-wee. Off we go. We're moving now. So that is what we're looking for. We're looking for, we saw it in here. Let's go back to it. I'm going to give you an example of what it looks like in context because it's so important to understand this stuff. What market were we on? Let's go back to ES. ES was a good example of this. Okay. So we were bearish here, right? We had a huge bearish impulse. And if we just look at this for a second, there's our bearish impulse. Down. Came up. What is this? Right here. Higher low retest. Could not break the low. Strike one. Break. It's not a true break of structure because it didn't break the impulse. Came down again. Another higher low retest times two. Sweep. Came back down. There's our pullback. There's our break. What are we missing here? Why did this market not reverse? All the signs were running together. We had two high-low retests. We had a break, a pullback. We had another break of structure here. What are we missing? We did not break the impulse or the structure breaking pivot. We never broke that. So everybody who tried to trade the reversal here got squashed. Stops below the low. Stops below the low. This stop gets run. It comes back, grabs liquidity from the smart traders, and slams through. What do you think's going to happen when they hit these stops? Holy smokes. Huge order run. Huge candle. Did I not just tell you this? This is it in context. You can see it right in front of your eyes. Let's go to NQ. What do we see here? The impulse. Let's just move this because I don't know that things just kind of out of nowhere. There's the impulse. Everything's inside the impulse. Here we go. Moving up, down, up, down. What happened here? Higher, low, retest. What happened here? Higher, low, retest. What happened here? Break. What happened here? Pull back. So we're going to reverse, right? Not so fast. Never broke the impulse. Sellers are here saying, no, not so fast. I need to get paid. Where are the stops? Right here. Stops get run, pull liquidity, break the low, huge candle. You see it over and over and over again. We go right back to selling. So, yeah, good stuff. You guys learning something today? Are you learning something? Man, this stuff is so complicated. Well, guess what? Trading, no one ever told you trading was going to be easy. It's not complicated. You need the right knowledge applied the right way. Most traders have tons of knowledge, but they don't know how to apply it the right way. So, this is why this class exists, so that we can apply it the right way. So, that is structural deterioration, the confirmed reversal. Trend shows deterioration. The key swing is broken, structure breaking pivot. Price fails to recover structure, lower high retest or higher low retest for that matter. Obviously, trend structure begins. Check. Checkmate. That's what I'm saying. This is how it works. That is how the confirmed reversal works. Okay. Now, you might hear these things called exhaustion. You might hear them called absorption. What does that look like? Exhaustion looks like less follow through. That's exhaustion. Pullback, lower high retest, that's absorption. Then you got a break, that's reaction. Pullback, go, that's your confirmation. And those are the sequence that we need for a reversal. So we talked about what's the best location to trade reversals. We talked a little bit about that last week. Best location to trade reversals is at an area of interest. Following divergence. We talked about that. Divergence, what is that? Limited follow through, aka exhaustion. That's your divergence signal. Area of interest, that's just a good location telling you that sellers are likely to get involved. So you put it all together, that's what creates good trades. And I would rather see you guys take one really, really killer trade every day than to take 3 trades with one net R on your trades. If you're a 1-to-1 trader and you're +2 trade, 2 winners, and you got 1 loser, what's your net R? Well, you're +2 minus 1. Your net R is 1R if you're 1-to-1. So you hit 2 out of 3, and that's good. There's nothing wrong with that. That's a 2.0 profit factor if you're trading 1-to-1 risk reward. It's great. It's not bad at all. But what would be better? +1 today, +1 tomorrow, +1 the next day, +1 the day after that. Same result, 1R per day, less trades, which means much, much better expectancy. Way better. So selectivity on your trades. You don't need to take so many trades. Just take the good ones. Wait for the best trades where all the stars align. But I don't have enough trades. Size your chart down then. But wait for the really, really good trades on the smaller time frame. Okay, so let's go to the charts. I have some charts here. Let's look at some charts. Okay, so on these charts, I have a 5-minute and I have a 1-minute. I'm going to show you. We always like to give you some kind of a strategy that you can use with this, right? First, let's see if we can find a reversal context. I'm going to go to a random position on the chart. I have no idea. This is gold. I don't trade gold normally. So let's tell the story of what's going on with the context. Can we find a reversal sequence? We're going to start here. What happened here? Is that a reversal? Yes or no? If we look at this, was that a reversal? Yes or no? Oh, it's NQ. I'm sorry, it is MNQ. It don't matter which market it is. It actually is a reversal. It actually is because we broke through the impulse. There's our structure breaking pivot. We broke it. So it is a reversal. Less follow through. Higher low retest. Break. Pullback. Break of structure. There's your sequence. Now, is it a good one? Is it something that you should trade? Well, that depends, right? There's more to it than just that. But yeah, that is a reversal. Let's keep going. Came down, came down. We're breaking back down. We're looking at the follow through. What's the follow through? Look at this impulse. Broke through structure, came right back. Small, shallow pullback, right? How do you measure these? Grab your Fibonacci. 23.6. That's a valid pullback, right? It's valid. It's not deep. It's a valid pullback. Break of structure. How many candles closed below this level? One, two. Were any of them open, high, low, close below that level? No. Is that strong follow through? No. Strike one. What about this one? Is there any open, high, low, close below this move? What about this pullback here? Let's measure it. It's probably about 50 to 60%. So 61.8. It's a deep pullback. Strike two. What's our follow through here? Not great. Strike three. What happened here? Sweep of liquidity. Did it close above? No. But that is a strike. Strike four. What's going to happen here at the low? Close below. What's the follow through? Not good so far. Another break, and it keeps going. So we didn't get the full sequence, but we got pretty close. Okay, limited follow through, strike. Deep pullback, another strike. A, B, C, D, E, F, another strike. Huge follow through. It's the end of the day. So all bets are off because everything changes. But this is looking at it in real time. Let's look at it up here. Huge move, shallow pullback. Wouldn't even consider that a pullback, really. Huge move. This is all one impulse in this case, coming out of a shallow pullback with a good, strong, impulse. Barely got above the break of structure, snapped back, huge impulse. Chop, 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 strike. One big strike right there. Came back down. We're reversal, right? Not so fast. Not yet. Slow down. We need a new impulse. Good follow through. Decent pullback. Not a ton of follow through, but there is follow through. What happened on here, though? We didn't get any follow through. Where's our impulse? Right here. This is the last impulse. Why? Because this is the one that broke above the structure, closed above, right? It's a decent follow through there, actually. Liquidity sweep. Strike. Break. Strike. Break of the impulse. Big strike. Come back. Pull back. Kept going. Liquidity sweep. Still going. Still going. Now we got to start all over again. Broke the impulse here. Came back. Lower high retest. Little follow through. Break of structure. We didn't get the pullback into another break, so it was never confirmed. So everybody's trying to go reversals here. What happened? They all got stopped out. The market knew that going into the market open. What does it do? Sweep, sweep, go. It happens all the time. This is why it's like not everybody, but a lot of traders are trying to trade reversals in this environment because they see the break of structure. So they're going, okay, I'm looking for my short. Where's the stop? Up here, gobbled up. They fight over the position, stopped out. What happens? They come back to smart liquidity. They push back into the highs. Where do they take profits? At the highs. This is the breakdown. So how do you trade this, right? All I hear this guy talking about is what not to do. So how do we trade? Here's what we're going to do. We're going to have two time frames. We've got a 5 minute, we got a 1 minute. Okay, when we have bullish territory, we're going to mark a line right here. This is where the market converted to being bullish above structure. This is where we're looking to get long. We're using two time frames. Now, I'm using the SMC tool. It's available in the marketplace. I think there's a huge sale right now. If you do want to grab it, you can. Do you need the tool? No, you can do it manually. Will it make your life easier? Yeah, 100%. So So grab the tool if you don't have it. All right, so we're going to mark this out, and we're going to say anything above this level, we're looking at going bullish, okay? So we have bullish territory. So we're going to go over on our 1 minute chart. We're going to go find out where are we? Where's my vertical line? I don't see. There it is. Okay. So in here is where we're looking to get longs. So what do we do? Well, there's a lot of things you could do. I trade anchored VWAP. That's my go-to. So what do we have here? Big impulse, ABC, chop, chop, chop. Not interested. Not anymore. Wait for the next one. Market's coming down, another ABC pullback into, there's our ABC. Pull, sweep, love it. Giddy up, let's go. Are we still bullish? Yeah. We never converted back to bearish. Technically, you could say that this is an impulse here, and there's your breakdown. But what happened? It just broke right back up. We weren't looking to go bearish anyway because we were trading with the bigger picture. So when we get back above this, cool. I'm good. Trade the anchored VWAP back to the highs. Trade number one. Was it a winner? Pretty damn clean. We're trading based on the context of the market. Let's keep going. Market, break of structure. I'm waiting for a new break of structure, and I'm looking for the impulse that led to that break of structure. This one, yeah, you could trade this. This one might have been a stop out, and it would have been a healthy stop. It's fine. Market's not going to respect everything 100% of the time. Waiting for a new break of structure and looking. This is not a. It's tough with these tools. I have a different way that I plot these. But we're going to say this is all one impulse. Okay, so just bear with me. Anchored VWAP. Yeah, where do you anchor the VWAP? What I'm looking at is what is the low, the pivot low, the real pivot low that led to this impulse. This is not a pullback. Why? Because it never broke. There's no lower low on any of these candles. You see that? I don't know how this made a wave down. I don't know how this system works. I would. I have a system that I use that I built, and it's based on my rules. And I've been doing this a long time. I built courses on this stuff. So maybe this would be better to go to, right now I have this set to a 2. Let's bump this to a 3 just to make it a little easier. That's better. Let's keep it on a 3, okay? So where do you anchor it? Pivot low. Trade first touch, back to the high for 0.85. There's your tag, swept a little bit, came right back up. There's your winning trade. So we're now 2 out of 3. Now it's at this point, it's 1 o'clock. I don't know if you guys are still trading or not. Or what? This one is a break of structure here, right here. What's the follow through on that break of structure? It's very weak. So if you see this very weak, you are guarding this position with your life. You're saying, look, I don't even need to take this. I just need to get back to these wicks and I'm out. So technically that's another winning trade. Now, we were staying bullish because the entire time we're creating bullish breaks of structure, bullish territory. We broke bearish for a second, and that's why we stay on the sidelines. Meanwhile, on our 5-minute chart, we stayed bullish that whole time. We never really broke bearish throughout the entire day. So technically, you could keep going in this environment. But when you start seeing this choppy stuff like this, where it's chopping, are we still trending in this environment? Like, I'm just going to delete all the drawings. Are we still trending here? No, we're not. Are we trending here? Yeah, we kind of are because it's an ABC pullback. Is it still valid? Yeah, it's still valid. What about this? Yeah. Yeah, we are. Could you take it? Yeah. What about this? ABC, break, ABC, break. Still kind of going. Then we chopped down. We broke back up, but we're really not trending anymore because we broke down, broke up, broke down, broke up. And there's no trend anymore. We're waiting for a new direction. Okay. So there's MNQ. Let's go to gold. Let's take a look at gold. Well, unless you guys want, what do you guys want to look at? Tell me, give me another market. Anybody? What do you guys want to look at? You guys are like, oh, I only ever trade MNQ. Gold. All right, let's go to gold. Everybody trade MNQ. They're just, we're all just a bunch of adrenaline junkies. All right, let's go to gold. All right, so let's just go to the hard right edge. First of all, what are we right now? Bullish, bearish, sideways. What do you guys think? 5 minute on the 5 minute chart. Bullish. Very clearly bullish, right? Very clearly. When did we go bullish? Technically here, but not really. I would say right here. This is when we went bullish on the day. Right there. So what do? We come over to we still on MNQ. So we first of all we go to MGC. There we go. Okay. Now I'm looking for what was the pivot that led to the break of structure. It's right here, and there's your trade back to the highs. Didn't quite make it. That's a stop out. It happens after a huge run. Okay. Come back in, ABC pullback into a new wave. Did we break structure? No. Do we trade it? No. So what we're looking at is on the higher time frame, what is our bullish, our structure? Is it bullish? Then we trade bulls. Where we're looking to trade above the break, above that. We were above that here. Didn't work. The other thing that we can do is anchor the lowest low that led to this break of structure. And we want to stay above the anchored VWAP on the higher time frame. Okay. You could do rally-based rally. I personally don't trade them. It's not my favorite. But look at how this 5-minute anchored VWAP holds up. It swept it there. One, sweep, held again. Like this stuff means something for sure. Fresh break of structure on the 1 minute. So I'm going to anchor the low that led to the break of structure on the 1 minute, which is right here. There's our break of structure. And right off the anchored VWAP, trade it back into the high. There's another win. Okay. Got another break of structure on the 5 minute. You could look to trade this as well. This is a real pullback. It's a break of structure here. Let me do this. I'm going to do this. I'm going to turn off the boss display. I'm going to make us do it manually. And the reason is you're looking at where's your impulse. This is an impulse from here to here. If you break above the impulse, that's a break of structure. Okay. If you break below the impulse, then that would be a break of structure trend change going the other way. Here's your next impulse. That is a new impulse. So we broke through this one. So there's your break of structure. Get rid of that. There's your new impulse. On the 1 minute, our impulse is here. Correction, impulse. If we have a fresh impulse, then we can trade this. There's your trade back to the highs. Winner. A lot of winners. Is this hard? Find the impulse. Let's go back a day. Let's go to yesterday. Do, 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 do. There we go. Okay, so now we're on yesterday. What do we have here? A whole lot of noise. There. A whole lot of noise right there. What happened? Came in, tagged, go. There's our break. There's our order block. This is what we looked at last time. There's our balance zone. See, does it come back and test it? It's testing it right now. Good to know these things. It's a huge order block. Let's go to the 1 minute and see if we can refine that a little bit. Right there. There's our 1 minute order block. Okay, it's testing it right now as we speak. There it is. Let's come back over. Anyway, here's our break of structure right there. There's our break of structure, right? So we know that anything below this level is in play. Anything below the VWAP is in play. I'll just get rid of this because that's just noisy at this point. So as soon as we close below that, we're now starting to look at, can we anchor and trade this? Well, did we close below this pivot? Yes. Was there any follow through? Not so great. Let's wait. Not so great. Good. That is good follow through right there. We have a close. We have another close, at least a couple candles. We can get behind this. So what do? Stop goes above structure. Why? Because we don't know if they're going to come back and test this high. Why would they test this high? Oh, I don't know, because it's your 5 minute break level. So of course they're going to come back and test it. So you got to leave your stop above that. So there's your first trade. Now, where's our impulse? Our impulse is this. That's our impulse. So we have to get below it. From here, well, from here to here, that's our impulse. So when we get below this and we close below it, that's when we're looking for our next trade. Did we get any follow through here? Not too great. It worked. Not great though. What's our next impulse? From here to here. So when we close below the impulse, right there, anchor the pivot that led to the break, close below. First tag after the close below is right here. Now I'm going to be the first to tell you, you would not have gotten this trade. Because what happens is the anchored VWAP moved from here. Well, you might have actually. Because the anchored VWAP was here on this candle. And it doesn't move down until the close of this bar. So this, you might have missed this one, but let's just play devil's advocate and say you got it, and there's the trade. Okay. So there's your next winner. Let's get rid of this one because we don't need it anymore. Okay. Do we have any fresh pullbacks and breaks of structure? No. So then we sit on the sidelines. We wait. So now we have to get below this level down here. Never did it. What do we see here that is showing us a sign that we could be reversing? There's two things on this chart as of this point that you can clearly see that it's, well, one thing. Okay, now we have two things. Possible reversal. Strike one, deep pullback. Liquidity sweep up here. That's not what we're looking for, but it's good to know. Then we have chop. Well, it's not chopping, but it's 1, 2, 3, 4, 5, 6, 7. There's a whole downtrend right here on the 1 minute. Double bottom, strike two. Came back in, higher low retest, strike three. Where's our impulse? Right here. That's our last impulse down. But wait a second, we're still inside this impulse. So we can't do anything until we get above that. Now, you could do this here. It would be more aggressive. You do have a impulse here. Technically, it's inside, but you have tons of room to get back up to this high. So I'd be the first to tell you, I'm jumping on this one because we had a break of this impulse, and this impulse is, you still got tons of room to get up here. So this is kind of a freak situation where this one would actually work. So, but neither here nor there, it doesn't matter because we're always trading with the higher time frame. So we wouldn't actually trade that anyway based on this. So you want to have both time frames line up. That's going to give you the better trades. And that one was clean. It looks really good. It's very pretty. In hindsight, you can go, oh yeah, that looks great. Until you add it to your trade plan and then you get stopped out and you're like, I don't like it anymore. Okay. Bottoms out again. Chop, chop, chop through the rest of the day. Okay. So that's context. So what do you do? Break of structure on your higher time frame, 5 minute anchor. Anything below that anchored VWAP with breaks of structure on your 1 minute, anchor the high that led to the break. This one didn't. You want to see a close below. This one is cleanest looking, and that's the trade right there. Okay. So that's how you put this into practice. At what point do you look to stop trading these? Deep pullbacks can be problematic. Not always, but they can be. When you're still around the break of structure area, we can see that we got pretty choppy there for a little bit. Like we didn't have a whole lot of follow through. We got deep pullbacks. This is why I don't like the minute charts for the record. You'd be much better off on a volume chart. In fact, we're going to go look at it. Let's go to 1597. I'm going to pull up a tick chart and show you what it looks like on the tick chart. Anything below a 5 minute, you'll always hear me recommend you go to a tick chart or a volume chart because they're way smoother. And it's going to work way better for you. Did you use 900? That's pretty fast. Pretty fast for MNQ, but look at the difference. Way cleaner. Now, this one might be a bigger chart. I don't know, but way cleaner price action. So now we look at this break of structure below on the 5 minute. There's our break of structure. Do you want to trade this? Yeah, I do. You can trade it back into the low. You don't want to put your stop way up here for structure. Here's how I do this. I measure to the low and then I measure to the high. And if my low is 224, my high up here is like 250, that's a lot. Normally, based on the time frames I use, I would actually trade this at a one with the stop above the high. It looks very large though. But if you had traded it right back to here to the lows, just take your profit. So quite a bit smoother. You could use this chart and a higher time frame. Or you could size this one down and then use a higher time frame tick chart. That would work too. What do you guys think? Good stuff. How do you stay on the right side of the market? Higher time frame, lower time frame. You don't have to, but it is helpful. Always trade the impulse. Yeah, 1597 tick. That's right. Always trade what the impulse is doing. Your impulse is here. If you are inside the impulse, you get one pullback in there. What happens after that one pullback? Right there. What happened? Chop, 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 chop. Holy smokes, came out, came back in for more chop. So that is what happens inside the impulse. What do you think is going to happen up here? Resistance. Why? Because this is the strong pivot that led to the break of structure. And the order block is actually all of this and then chewed up to here. So that's the order block. Maybe one of these days we'll do an order block lesson. I don't know, but that's our resistance. That's why it's topping out in there. Even though it looks bullish, all signs point to bullish, we're trading into resistance. So because we're smart traders, we don't do that. So why 1597? there's this really, really smart Italian dude um, from Pisa, and he had this idea that if you add 1 plus 1 plus the previous number, so 1 plus 1, 2, plus 1 is 3, plus 2 is 5. Well, yeah, yeah, Fibonacci. Famous Italian dude in the history books. Smart guy, mathematician. Yeah, that's why I use it. It's at this point, honestly, it's superstition. Let's just call it what it is. Could you use a 1500 and be just as effective? Yeah, yeah, absolutely. It doesn't matter, probably. But what if it does? I don't know. I always use the Fibonacci numbers. Not always, but usually. So, do you have recommendations on which volume to look at for each market? No, but we could go through it right now if you want to. I'm cool with that. I know we've kind of hit our time at this point. So, what other questions do you have? We will stick around and look at some of the volume. Absolutely, we can do that. So here's your weekly assignment. You don't have to turn in your homework, but this is something you want to do. Find your impulse. Find your most recent impulse. If you just go backwards, okay, where's our most recent impulse on this chart? Here to here, right? There's our most recent impulse. Find it. Anchor the low and look at it. Wow, amazing. And then look at it on a smaller time frame with the anchor on the smaller time frame. And there's your, did it close above? No, not there. It's actually right here. That is the trade. Could you trade this? Yeah. Let's do it. It's kind of choppy up here, though. Down, up, rut row. Rut row. I hate range for this. No, I do not like range charts for this. No, 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 no. Don't do it. You'll be miserable. Yeah, stick to volume charts with this. Let me save you some anguish and loathing. Don't do Renko charts either. What just happened here? Came in, tagged, couldn't make it all the way. At this point, I'm out. Does the trade still warrant me staying in the trade? No, it doesn't. There's no reason to stay in this trade anymore. If it goes, great. But stop is at break even at this point. So would I get back in? Nope. Uh-uh. Not a chance. So that's your homework. Find the break of structure. So actually find two impulses. This impulse and the previous one. Did it break above the previous impulse? Yeah, right there. What about on the 1 minute? Previous impulse, inside ABC, truncated C, break of structure, and anchor the low that led to the break. That's our pivot that led to it. And then there's your anchored VWAP. Now at this point, all bets are off. I don't know if they're going to sweep it. I don't know if they're going to come back and tag the high. I don't know if they're just going to come straight down and grab the stop. So these recordings are saved. What we're doing is we're building out a separate page on the Tickblaze website right now. So they'll be all loaded there for you guys. And remember, invite your friends, because if these are not pretty highly attended, then I don't know. We need the attendance to be able to keep doing these because it is a free event. So make sure, tell your friends. Tell your friends, be like, you better show up, man. I like these. I want to keep going. But no, these are fun. I love doing this stuff. Hopefully you guys are learning tons. And so yeah, so find one clean bullish and one clean bearish. Find a structure break, and then find the reversal sequence. That's going to be the harder one to do because there's a bit involved, right? Huge impulse, ABC came back down. There's your, sweep of liquidity, sweep of liquidity again. Did we break the impulse? Not till way up here. And by that point, it would be confirmed bullish. But find that sequence. Yeah. Good. I'm glad you guys are loving these. These are a lot of fun. So, um, yeah, you're welcome. Absolutely. Mark your key swing highs, swing lows. Here's the deal. Some of you that don't have the SMC indicator, I'm going to show you a little secret. There we go. If you go to indicators and scripts, and then go to indicator scripts, and holy smokes, there's a lot of links. Okay, I'm going to give you the link. Let's do this. Okay, I'm going to just do this. Let's make our lives easier. I'm going to find you the link. There we go. Okay. That's not what I wanted. Yeah. Okay, let me give you this link. There's a free swing structure tool available from Tickblaze. You don't got to pay anything for it. It's free. It's not going to show you the breaks of structure, but I'm going to give you a hint. Impulse, impulse, impulse. What is an impulse? Anything that creates a higher high. So if we look at this chart here, what's an impulse? Look for the higher high. That's an impulse. Look for the lower low. That's an impulse. Look for the lower low. That's an impulse. Higher high. Impulse. You guessed it. No, no, no. Higher high. Impulse. Lower low. Impulse. Higher high. Impulse. So what you're looking for is, does it close below the previous pivot? Not just the previous pivot, though, actually, the impulse. Okay, so there's your impulse, impulse. Closed below, closed above. We are now bullish. Why? Higher low, that's a trend. Lower high, lower low, lower high, lower low. Sweep, sweep, pullback, ABC, break. That is where we are confirmed bullish. But what about the lower low there? It's fine. We're still bullish because it just swept. It didn't close below. Still bullish. So at what point are we bullish? Here? No. Here? No. Here? No. No. Yes. This is where we are bullish because it confirms the sequence. So find the sequence and then use this tool. It's free. You've got the link. You just click this little download button, import it to Tickblaze, and you're all set. Rocking and rolling. What happened here? Oh, they swept the low. Isn't that interesting? There's our ABC pullback. Where's our low on the impulse? Right here. As long as you are above this, staying above that, and no close, we are bullish. Rock and roll. All right. So we gave a lot of great info. We'll post this as soon as possible. We're going to build out that extra little page. We'll get that over to you. In the meantime, you should get an email with the replay. If not, just send us a message to support, and we'll get you squared away. On that note, you guys are awesome. I'm going to stop the recording here, and then we're going to look at some volume charts, and feel free to stick around. Otherwise, we will see you next week. Have a great weekend. Stay safe. Trade well, and we'll catch you soon, okay?